What's up, folks? So, huh. Um, so, it's actually showing the wrong screen. Give me a second. Um, Perfect. So, starting off at the daily chart, the weekly chart, Vice still bullish as outlined in the last few days. Mondays and Tuesdays stream, I told you guys that we are expecting high price for this week, and that our drawn liquidity was this weekly volume imbalance right here, and that we may be, if we can close above this weekly volume imbalance on daily, we might see another run higher into these highs and this weekly or daily fair value gap. So let's see. Unfortunately, price just took off again before we actually start the New York Open. So New York Open is in 12 minutes. So we are still in pre-market. Yeah, let's drop down into 50 minutes. So in yesterday's stream, we analyzed this New York Open right from this candle to 11 a.m., 11:30. I guess I think 11:30 I ended the stream, and my bias was rather bullish, rather bearish. But as you can see, we were just stair-stepping higher and higher and higher. So this SIBI becomes a balanced price range because we had buy side delivered. We had a lot of back and forth here, rallied above, came back down, had also a lot of back and forth price action. So this price range, the entire price range, was efficiently delivered, and as you can see, we now took out this low during pre-market time, and now we are running to the upside. So here only we are trading above the weekly volume imbalance, which is kind of unfortunate because this was actually my bias for today's New York session. I thought we maybe are trading around here at the start of the 9:30 opening, and we have a manipulation to the downside, this low or maybe pre-market lows, and then target London highs. But yeah, we kind of already swept buy side, and price is now in discovery. So bullish for today's session, still bullish. We kind of already delivered our bias, So we got to see what the market is going to provide us in terms of price action and liquidity pools and stuff. Draw best case scenario would be this daily fair value gap, but I think it's not realistic that we trade all the way up in here in today's New York session, but maybe that's a draw for Friday or next week if we are able to close above this weekly volume imbalance on the daily chart. So now obviously daily chart is printing and it's closing today at 5 p.m. And if 5 p.m. closes above this volume imbalance, weekly volume imbalance, then we are more likely to trade up into the daily fair value gap above here. Now we have to monitor this premium wick, and we have to gradually look how far price is willing to reach for. Would be more likely to trade even higher if we close above this midpoint of this wick on a daily. So if the daily chart not only closes above this weekly volume imbalance, but also above this premium wick consequent encroachment, that's even more bullish. Okay, so we have to monitor this premium wick and see how far price is willing to trade up into these gradient levels. So for now we are above this weekly volume imbalance. Yeah, I think I'm waiting for 10 a.m. because I don't know, we'll see. We have a little minor buy side liquidity pool above here, so yeah, we gotta see what liquidity gets engineered. But for now, I don't really have a target. Maybe this premium wick consequent encroachment. That could be something we could be reaching for. On downside, in today's London session, we engineered buy side liquidity, took out these lows, traded down into a new day opening gap here twice, then took out relatively equal highs. Yeah. Kind of went sideways, manipulated this low, swept it, and now we rallied and took off to the upside. So yeah, gotta see. Maybe we can delete this weekly volume imbalance and even turn this indicator off. So let's see what's where is 4:14 p.m. close. Okay, so this is yesterday's close of the regular trading hour session, and today's opening is around here somewhere, depends on where we open in 5 minutes. So we have a premium gap, premium opening range gap. Gotta adjust my camera. Okay, perfect. Yeah. Yeah, for now we can also delete daily wick levels and just mark up the liquidity pools. So this is something you always want to do before trading London session, for example, or doesn't matter what session you trade. For example, if you trade London markup, Asia high, Asia lows, these are time-based liquidity pools that London session oftentimes targets. So, for example, you have bullish buys, London oftentimes manipulates the downside, takes out Asia lows, and then goes to the upside. So you always have to mark up the liquidity pools. For example, now New York session, I always note pre-market highs and pre-market lows. Pre-market is from 7 a.m. to 9 a.m. or 9:30. These are salient liquidity pools that the algorithm is going to refer to according to ICT and also according to my experience. Obviously, I tested it and it proved me. So 7 a.m. to 9:30. Now, okay, this is 7 to 9 a.m. time window. So pre-market high already was taken out. If you say pre-market from 7 to 9, 9 to 9:30 is also important liquidity, but oftentimes 9 to 9:30 is not really creating a new high. So most of the times your high and low of the pre-market session is created between 7 and 9 a.m. Now that's not the case for today, but most of the times. So pre-market low, pre-market low, to the left, pre-market high. So ICT says 7 to 9 a.m. these liquidity pools are important, but he also likes 8 to 9:30. So I just put those time frames to time windows together and say 7 to 9:30 liquidity pools are important. So I always note them. This pre-market high, pre-market low. So this is 4:14 p.m. close yesterday. So premium gap, premium opening range gap. Yeah. Hmm. Okay. 30 seconds left. 30 seconds. Opening range gap visible in 10 seconds. Yeah, what I also like, the liquidity pools, I also like to note are last PM session, so yesterday's PM session, highs and lows. Also very important, I would recommend you guys to check out ICT's video One Setup for Life, I think is the title of the video, that he talks about all the liquidity pools and how to know which liquidity pool is important, which one not, which is important when is pre-market highs and lows important, when is London session liquidity important, when is yesterday's PM session important, and how you frame your trade ideas around these liquidity pools and how the market is drawing to them. So very important, definitely check out the video, one setup for life. Okay, so pre-market, opening range gap, opening range gap, midpoint traded to, always 70% likelihood that price is drawing to the midpoint of the opening range gap by 10 a.m. So delivered today. Lower quadrant also delivered. Pre-market high, pre-market low. Nothing is, no liquidity pools engaged for now. This is pre-market, this is PM session low. Yeah, PM session high. Doesn't really matter. Already got swept. So let's go back to, okay, let's turn, it's too much on the chart, so let's turn off the indicator and maybe just monitor this here. Kind of weird. Hold on. The volatility is insane. Huh. Okay, price traded into today's new day opening gap and also closed opening range gap low. We took out, okay, interesting. Okay, no, this is not taken out. These lows were manipulated, so swept minus sell side. We have obvious relatively equal lows, so if we see pre-market session low gets taken out, obviously, or most likely pre-market lows also get swept. Okay, bro, that's huge. PM session low taken, pre-market low taken. Damn, bro, the fuck, man. Traded into yesterday's opening range gap lower upper quadrant. That's yesterday's opening range gap, close to open, traded down into, let's make this spotted. Okay, traded down into yesterday's lower quadrant of the opening range gap, failed to trade down into consequent encroachment. Inside the weekly volume imbalance, trade down into lower quadrant. Bro, okay, so kind of hard to tell. S&P shallowly took pre-market lows and we just dumped through pre-market lows on NQ and that was moving higher, so kinda we have a decoupled market right now, so nothing I want to be trading. Okay, let's go back to, let's delete all of this. Okay, pre-market lows, PM session low. Okay. Interesting. So I have no clue right now. What price wanting to reach for. Trade down into yesterday's first percent fair value gap, into yesterday's opening range gap, lower quadrant. Manipulates it. Okay, maybe let's go into the 15-minute chart. So London low. We swept London low. I don't know if we were bullish, as I told you, this is all of this is actually balanced. Okay, there are no inefficiency. Okay, we have this volume imbalance here, but except for that, everything is traded up, down, up, down, up, down. That's back and forth trading. So this entire range is balanced. So if we were bullish, price wouldn't need to reach as far down as it did. So yeah, that's not too bullish for me. And we also, so it's, I don't know, it's kind of difficult to say if price is using this premium wick or this one. So I was kind of debating about what wick to use, but as you can see, price got rejected from this wick's low perfectly to the tick here. That's where all of this price lag originated from. So okay, maybe we can go back to daily and we map out this premium wick. No. And we see, so if we are bullish, we want price to stay in the upper half. Price failed to trade down into this auto block high level. Yeah, this tiny little volume imbalance is today's new day opening gap. Yesterday's new day opening gap. So we got this wick. Still also, I would advise you to monitor the weekly volume imbalance gradient levels. I'm looking at them, but obviously I can't show everything on one monitor. I gotta keep the chart for you guys clean and simple. So yeah. Okay. We used yesterday's discount wick upper quadrant. Took out, okay, let's see. We took out London low. London low. Okay. London low got manipulated. Traded down into yesterday's discount wick. Let's see. First percent for value gap. That's 930. So I guess this is first percent for value gap. That's 935 value gap. To use 930's first percent for value gap is, yeah, it comes along of a long list of rules with it. So yeah, ICT advises you to take the first percent for value gap that forms at 931 or later, but that's too small for me. So as you can see, the audio also uses this fair value gap. So I'll take this one as the first percent fair value gap. This fair value gap also took out these lows, so that's going to be the important one. Sorry guys. Hmm. Hmm. So yeah, let's wait and see. Yeah. What could be the objective on the downside? That's the question. So if we go back to the 15-minute, Oh boy, oh boy. Relatively equal lows. Okay, yeah, they're kind of too obvious. Um, hmm. Relatively equal lows. Manipulates buy sides. Yeah. Difficult. So this first percent of that's that first percent fair value gap is mandatory. So if we were bearish, that first percent fair value gap should kinda hold price lower, and if we are able to trade above and use this first percent fair value gap as an inverse fair value gap, that's maybe something we will be looking for if we are bullish. So if price stays below it, we look for downside. If price is able to reach above and use it as inverse fair value gap, we may target these pre-market highs. So let's see, New York opening range gap and New York opening range ends in 12 minutes. So I'll wait to 10 a.m. and see where the opening range low is and high. These are also important liquidity pools that the algo's referencing to. So gotta keep that in mind. Hmm. Hmm. Bro, yesterday's session was horrible. Please don't give me. Bro, when I see this kind of price action, yesterday's first 30 minutes looked like this. Bro, all of this bullshit. No trades for me personally. This is just too. I don't know, man. Nothing tradable for me. So go back. Yesterday's discount wick upper quadrant. Price got support from the upper quadrant. So maybe if this low stays intact until 10 a.m. and then we sweep New York opening range low and then manage to shift to the up buy side, get above this one, and maybe we can take a long then. That could be a trade idea. Okay, Dow. Let's see. So S&P, so raging lower. So S&P first percent for value gap here, and yeah, S&P is just dumping. S&P also has these relatively equal lows here, so that could be the target. Doesn't look like, for me personally, I don't think that's manipulation. If price reaches down further, that's not manipulation. I think we are then in a bearish intraday market, and every move to the upside is rather a retracement than a reversal. So yeah, let's see. NQ still is still in the same range as before. S&P and Dow, MYMZ also crashing to the downside. Dow doesn't really, I don't think the Dow is reaching for these lows here. So yeah, Dow isn't too important for us. Okay, so 950 to 10 macro already started. NQ still held in range. S&P moving lower, Dow is moving lower. I don't know, high time frame buy is still bullish, but intraday doesn't look too bullish for me right now. We took out sell side here, then moved to the upside, got rejected from this premium wick low. So I told you guys, monitor this premium wick or this premium wick and put on gradient levels, and as you can see, price got rejected off of this premium wick low level. That's where all of this price one to the downside originated from, which led to London session low manipulation. So London session got taken out. Now price is kind of moving sideways. Okay, so let's note yesterday's first presented. 9:30. Okay, no, it's not. It's not yesterday's. Is it yesterday's or is it the day prior? 9:30. Yeah, it's a day prior. Okay. So day before this is actually Tuesday's first percent fair value gap. That could be important for today's New York session. As you can see in price, it's trading around its consequent encroaching point. Yeah, let's just keep it simple and use today's salient PD arrays. So liquidity pools, buy side, sell side, first presented fair value gap. I guess, guys, that's trading. Just be patient. Wait for your model. If your model doesn't occur, how do you pronounce it? Occur. If your model if your model doesn't comes to fruition and shows up, then there's nothing to trade. For me personally, I always look for some measure of sell side or buy side sweep. Depends on if I'm bullish or bearish. If I'm bullish, I look for some measure of sell side to get swept. Look for a high time frame draw on the buy side for an intraday draw on the buy side. Maybe also a new day or new week opening gap as a draw, or maybe daily fair value gap levels. Like, I don't know, for example, in Monday's opening, New York opening, in Monday's New York session, I was also streaming, and for the target for Monday's New York opening session was this weekly volume. I'll show you guys. Was this weekly volume imbalance midpoint? So Monday started here, traded down, failed to trade up down into this suspension blocks midpoint. That's bullish. So bias was to reach up into this midpoint of this weekly volume imbalance, which we did. So draw could be also daily fair value gap levels, or premium wick levels, or discount wick levels. So depends on what kind of market structure and what kind of market conditions you are given. So okay, 959 opening range low comes here. I don't know. 30 seconds left till 10 a.m. Okay. If you ask yourself what kind of levels these are, these are actually yesterday's discount wicks gradient levels. So on the daily chart, I noted this daily wick. So in order for us to be bullish, we would want to see only this upper half of this wick be traded into. So If price reaches all the way down, that's not too bullish for me. Of course, we have this auto block right here, so price could reach all the way back down into that opening level and repel higher. But for me personally, and also according to ICT, it's always better when bullish, the price stays in the upper half of PD arrays. That's a discount PD array. Put gradient levels on it and monitor it. So it actually would be perfect if we repel higher from that wicks open that wicks upper quadrant. So price also referred to the upper quadrant here. Show the reaction to buy side. Went up into first percent fair value gap. And now we gotta live with this price action right here. So kind of hard to tell. So this is just too obvious. That could be the draw for today. So if price reaches down below this opening range gap, if price reaches down below this wicks, that's a daily wick. Okay, now you can, of course you don't see it because we are on a 1 hour chart. But if you view it from the daily, that's yesterday's discount wick. So if we close below its midpoint, then we are more likely to see lower prices. And maybe these lows. But for now, if we stay in the upper half of this wick, that's rather bullish. Yeah, so let's see. Prices not showing any willingness to go higher or lower, just moving sideways. Maybe I could just put some music on. I don't know. Oh, Timur. Yeah. Bro, I don't know. Kind of look like yesterday's New York session, bro. It's horrible. The fuck is this? Come on. Come on. Monday and Tuesday was beautiful, and yesterday and today's session is. I don't know what to tell you guys. Yeah. Yeah. Looks trash. Bro, have you seen my 2 losses from today's London session. So there's actually nothing happening right now. So I'll show you my two trades I took in today's London session. So we had obvious relatively equal highs on the buy side, and we had relatively equal lows. So what I was looking for is a manipulation to the sell side and then a market structure shift to the buy side, targeting these relatively equal highs. Of course, price just dumped, and as soon as this candle printed, I knew, okay, that's not a manipulation. We are now looking for a sell side objective that's way lower. Then I was looking for a lower sell side objective, and then I saw these relatively equal lows. Price was reaching down for them, and also trade all the way back down into yesterday's or today's new day opening gap. I think yesterday's, maybe, yeah. Yeah, yesterday's new day opening gap. So I will stay patient. I thought about taking a short here, but then I remember ICT saying whenever you have relatively equal highs and relatively equal lows, wait for one side to get swept. So that's the reason why I didn't take this trade. That was the short idea I wanted to take, because we have a high, low, higher, high, low. That's a breaker here. That's an order block. That's a fair value gap. So perfect setup. That's my model. But the only reason why I didn't take this trade was, yeah, because of the fact that we have relatively equal highs and lows. So didn't take this trade. But as you can see, price delivered beautifully down into a new day's opening gap. So that's a point where I was looking for a model. We manipulated to the downside, went down into new day opening gap, and then I thought, okay, now it's time for price, for the algo to attack these relatively equal highs, and we did, but not here. Okay, so I tried it twice. Kind of FOMOed in, went long here, stopped out here. Yeah, this was kind of FOMO trade. Then I waited for a macro time window, which started here, 9:50. We had a low, high, lower low, and a high. That's a breaker. Fair value gap, unicorn, fair value gap, order block. So the trade I took looked like this. So yeah, you could target this minor buy side or these relatively equal highs. But as you can see, I got stopped out here. Price stopped me out, went higher again into the new day opening gap, then went down into yesterday's new day opening gap, order block, and then take off. No fucking opportunity to go long in. Bro, it's insane what happens in the past, I don't know, 1 to 2 months. I don't know, I feel like it's every day the same. You get stopped out, have a deeper retracement, which is actually not unnecessary, but price wants to troll you, I don't know. And then price goes to your TP, to your target, delivers your buys, but there's no real entry opportunity when the real move is revealed. So that's kind of bullshit. And I don't want to go long in here, okay? Where do you put your stop loss? That's a question. We are already almost taking out these highs, and it's just too far in a premium. So that's not a long for me. And there's no actual retracement here. So what do you want to do? I don't go long from here, okay? I don't got the balls, to be honest. You can do this, bro, I don't take this long from here. Of course, that could be considered a high probability auto block. Why is this a high probability auto block? Because we retrace down into this new day opening gap, and we also repelled from the weekly volume imbalance that I was talking about all week long. So here's actually a weekly volume imbalance comes with encroachment, so price trade down into it, and this is where all this price run originated from, and also this one. So that's a high probability auto block. Yeah, but I don't know. It's not my model. My model would be, okay, take out minus sell side, auto block, okay, be supported from the auto block, repel higher, then retrace down into this fair value gap. That's an entry for me. Bro, I'm all over this fair value gap if price retrace down into it, but we have no king retracement. Bro, this trade would have made up for all of this bullshit, for all these losses here. So I actually lost $70. As yeah, I can show you guys. I'm always open with my trades and share it with you guys. So we were up $360 yesterday. Today I lost 2 trades, which amounts in total of minus $70, or yeah, 77. So yeah, as you can see here, the executions stopped out. Went long here. Accidentally I bought another contract when I wanted to actually sell a contract. So I was long 3 contracts, realizing it's probably not going into my favor. I wanted to take one off, but I didn't take one off. I just added one, and as soon as I realized it, I directly sold the same contract with a minus of $4, and here I got stopped out here. So this trade kind of looked like this, which is also, it's not really necessary. It's not really a FOMO trade, because trace down into this fair value gap, left this breakaway gap, so only trade that down into its upper quadrant of this fair value gap. Okay, that's really bullish. Volume imbalance. Okay, that it's actually a valid trade setup, but I went long 8:43 a.m. so in 7 minutes macro starts. So kinda I thought, okay, this actually looks like the day before yesterday's London session. Okay, and the day before yesterday's London session just looked like this. Market structure looked like this. We had relatively equal highs, a huge sell-off, and then a reversal. But the reversal looked like this reversal, like this price run. Okay, imagine this price run would just be here, and you wouldn't have this bullshit price action right here. Okay, that was the day before yesterday's New York session, and I thought, I don't want to be the one who is again missing out on this huge price leg. So I went long in here, got stopped out. Okay, tried it again with my model breaker, unicorn for value gap, and so on and so forth. Stopped out again, kind of went sideways, dropped down, retracement, and now there it is. Again, without me, I'll be trading missing the trade. Fuck you. Fuck you. Stupid ass market maker. Bro, I don't know what to tell you guys. How do you want to do price action, reprice action with this fucking bullshit? Fair value gap went lower, and we kind of shared the same range for like 50 minutes. Took out sell side. Again, same range for 15 minutes. I mean, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. About 20 minutes, we stayed inside of this candle's range, bro. How is it possible that we have 1, 2, 3, 4, 5 candles delivering 150 points, and then we have 15 candles delivering 50 points? From here to here, 50 points? That's crazy. Yeah, 160 here. Okay. I don't know. First percent fair value gap. Tim, what's up? How's university? How's gym? Did you recover from your how do you say, Erkältung? But we actually had 4 viewers. That's the highest viewer count I had since I started trading live. Yeah. I also been to the gym yesterday. Arms and shoulders, bro. Heavy pump. Nice session. Oh, okay. Nice. 10:18. Still 40 minutes left until 11 a.m. So maybe we can catch a trade in the next 40 minutes. I don't think so. If we resume trading like this, bro, I'm out of here in 5 minutes. Oh, come on. Okay, maybe we just play around a little bit. Where's my footballer? Here. Can you guys see anything? No. No. I want to see. Okay, maybe. Okay, wait a second. Oh, bro. I'm retired. I was a professional footballer. Not anymore. Still doing nothing. Okay. Now look at this. Whoa. Did you guys see it? Oh, we got it on cam. Once a border. It's in your blood, you know. I'm interested in what other live streamers are doing. Are they taking longs or shorts? I don't know. Maybe they think, oh, Sasek got taken out once. Now this Sasek got taken twice. Order block. Okay, no, it's open. It's not trading. It's not traded above. That candle is open. So okay, no, we didn't really have a market structure shift. So if somebody's actually taking trade, I don't know, bro. I would advise you to go to psychologist or I don't know, bro. There's nothing to fear of missing out or nothing to do in here. Yeah, bro. Timur or all of you guys, I would advise you to go to the regular trading hours chart. Okay, maybe we turn off executions. Kind of distracting. Okay, so go to regular trading hour and monitor yesterday's opening range gap. Okay, do like this or maybe this one. Nah. Okay. So yeah, let's delete premium wick gradient levels. So we are trading in the upper half of yesterday's opening range gap, and price was not able to trade into the lower half. Only the wicks wicked into lower half, bodies stayed in the upper half. So reach down into the midpoint. That's actually a bullish price signature, okay? But as long as we are below this first percent fair value gap, I wouldn't be looking for higher prices. So today's opening range gap. Okay, took out PM session relatively equal lows. Okay, relatively equal lows here and here. I don't think we see higher prices, bro. Yeah, I think we are more likely to see lower prices. Doesn't really look too bullish for me. On PM session, on regular trading hours, here are too many relatively equal lows. They're too obvious, okay? And when you go back to the 1 hour chart in electronic trading hours, not regular trading hours, you also have these relatively equal lows. So don't get me wrong, on the high time frame, we still want to see higher prices. I want price to close above the weekly volume imbalance on a daily, but it doesn't look like we will today. You only wicked higher, but yeah, okay. So let's delete or maybe just hide yesterday's opening range gap, hide it, and go back to daily and mark out yesterday's discount wick. So we don't want price to reach down below the midpoint if we are in fact bullish. But I think today's intra or today's New York session is rather bearish. So we could see definitely a run lower below this. Okay, there it is. There's a run lower. First percent fair value gap. Okay. That's why I didn't want to delete the opening range gap. This price run originated from the opening range gap high, yesterday's opening range gap high, okay? So yeah, that's actually too much, but it kind of looks like price is rather referring to the opening range gap than to yesterday's wick. So let's hide the wick gradient levels. Opening range gap levels remain. I can delete this one. Okay, so objective on downside, we have, well, this is actually way down. Okay, but could be reached. Price could be reaching down into these lows right here. Maybe on the 15-minute. Do we? Okay. The volume imbalance I was referring to in the beginning of the stream, almost forgot it. That's actually a good draw for now. Maybe put on new day on new week opening gap. So we have new day opening gap. Wait a second, give me a second. We have the volume imbalance that price could retrace down into, and the new day opening gap. Volume balance, new day opening gap. So let's go back to the 1 minute and show this one and this one. So that's buy side. That's yesterday's opening range gap. That's a volume imbalance. Reach down into lower quadrant. Hmm. Okay. Okay. Do we get a market structure shift? If we have a market structure shift now, I would rather interpret it as a run on buy sides, run on buy stops, and then move lower. As long as we are still above, still below today's first percent for value gap, I wouldn't be looking for longs personally. So, come on, bro. I lost the skills. I wouldn't see me. It's just me personally, my personal opinion. Okay. Of course, we could see a price run higher now, but I wouldn't be looking for buy side right now. I would rather see this buy side as a turtle soup to go to go lower from. Okay. Timor enter longs on inverse for value gap. So what's your inverse for value gap? Probably, I don't know if you are trading on 1 minute, 2 minute, probably 2 minute inverse for value gap. Okay, let's see. Timor against me. Yeah, 2 minute inverse for value gap. That's what I thought. Okay. Let's see. It's your trade, boy. I don't want to talk you down or take your confidence, whatever. Not a trade I would take, but if that's your model, go for it. Definitely. Yesterday's opening range gap high. Okay, Tim was afraid. No, don't be afraid. That's your model. If your entry criteria, everything is checked. Also, it could be me who's wrong in here in this example, okay? Maybe you're wrong, maybe I could learn something from you. Definitely valid. Let's see. Bro, it's just for me. Oftentimes, in the beginning of my trading career, I took these trades where we went to the downside. Actually, this would have been the sell side liquidity. I wanted price to shift higher from after we take out these lows, but price took out these relatively equal lows, then took out this low and this low and this low, and I thought, okay, finally we took out the third sell side liquidity. Now price has to go higher, and I always found myself in a position where I then took the long on the first market shift, and yeah, I got burned. And that's why I don't want to be the one who is picking the bottom in a bearish market. Of course, we were bearish since the open. So for me, we are not actually bullish, in my opinion, from my point of view. So I don't want to fall into old behaviors. So I actually wrote down on my, that's kind of consider my cheat sheet, okay? So these are 4 little pieces of paper where I wrote down like psychology things and my rules. It actually says do not pick a top when bullish or bottom when bearish. So I don't do that. Money management and model summarize in bullet points. Okay. So what I want to see in my model is we want to see NQ, ES, and Dow trade into same direction. Okay, that would be valid. Trade both all of the 3 average are now moving in the same direction. Have we taken relatively equal high lows or sell side? Yes, of course we have taken that. We also have a buy side on the upsides. do we have 1 minute order flow entry confirmation? So we actually have what do I mean by 1 minute order flow entry, 1 minute order flow confirmation? If we are in fact bullish, we had a market structure shift here, okay? Timur entered on this 2 minute inverse fair value gap. So if we are in fact bullish, that retracement down into this bullish fair value gap would have been enough. So confirmation for me would be actually this. This fair value gap is a breakaway fair value gap because this entire range is not traded to, okay? Price trade only down, and we had an institutional order flow entry drill. So this actually looks like a balanced price range because we have a SIBI to the downside and a BISI to the upside. So this actually looks kind of bullish, but still could reverse lower, or of course also could go higher. But for me personally, I would only take long if you get through this first percent fair value gap. So I don't know how Timur is doing it because he's also on my free Discord channel, and he's always when he goes long, for example, he always goes long from kind of the earliest point where you could go long from, which is actually this inverse fair value gap where he went long from, or this institutional order flow entry drill here. So that's 1 minute order flow entry confirmation. Entry drill, breakaway fair gap. Yeah. Where's your stop loss? I think below this low right here, I guess. So his trade kind of looks like this, I guess. Okay, he says yes. We see. Now we have some entertainment. Okay, interesting. Good point for you, Timur. We have okay, sorry. No. Yeah, it's right. It's I thought I was wrong, but we actually weren't able to trade down into the midpoint price, and this is what I wanted to see if we are in fact bullish. If we are in fact bullish, we don't want price to reach down into the midpoint or trade below it, and we just failed to trade down into the midpoint, which is a really bullish sign. So maybe I'm also looking for about bin break even. Okay, so Timo just trailed a stop loss to break even. So that's actually a bullish sign. Failed to trade down into consequent encroachment. And if we now are able to use this fair value gap as an inverse fair value gap, that would be something I would consider taking a trade on or from. But what was your confirmation? Okay, Timo got out. Timo's trade look like this. Okay, so I think he got in as soon as price went through this inverse fair value gap, stop loss below here, and he got out at first percent fair value gap here. At 1-to-1, beautiful, why not? 50 points, nice. GG, W in the chat, nice. Okay, perfect. That's his model, and there's nothing wrong about it. So now it's interesting if price uses this first percent fair value gap to trade lower from, or to inverse it and trade higher from. That's something you want to monitor now. So, I don't know. Prices spending too much time around the consequent encroachment, the midpoint. Okay, so if we are bullish, you want to see price trade through this first percent fair value gap. But what made you confident? Why did you take this trade? It's just, how did you trust this trade, Timur? It's just the first opportunity, the first market structure shift. Of course, high time frame bias is bullish also. Yes, correct. Okay. We took out, actually, okay. We took out these relatively equal lows. We still have this volume imbalance, which you want to see on a 1 hour, I guess. Huh? No. Yeah, okay. Obviously, he's also on volume imbalance. Where is it? Here. No. Here. Okay. Took out sell sides. Yeah. Okay. Maybe you should have. I don't know. Hmm. Hmm. Spending too much time instead of this first percent fair value gap. Macro starts in 5 minutes. So if I want to take a trade, it would be during the macro time window. Timo, what do you say? Would you re-enter? So I don't know, if we put a fib on a range from the pre-market high to the low, that's a range we are trading in. If we trade above, get an order block here, and retrace down into the order block, we are already in a premium and inside of the opening range gap, which will also act as premium sensitivity to repel price lower. So the likelihood that price retraces on us and that we get stopped out in here is too high. And entering from here, that's, I would only do this when we have clear bias and good price action, and that's bullshit. I don't want to take the first entry opportunity. Yeah, okay. So first percent fair value gap holds price lower for now. Told you guys, I'm waiting for this first percent fair value gap to get breached. If we are using it as an inverse fair value gap, then you can use it to the buy side. But as long as price doesn't breach and trade through it, I don't want to go long. Oh boy, oh boy. Deep retracement. Is that our short opportunity? I don't know. I don't know yet. Um, 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 um. So, first percent fair value gap. Obvious fair value gap here. Hmm. I mean, look, that's pre-market lows, okay? That's sell side. Now ICT says highs and lows liquidity pools should be extended to into the future. Why? Because these are also PD arrays, okay? And kind of looks like price trading lower trades up into liquidity pool again, into first percent fair value gap, accumulates lower, trades lower, trades back up into it, accumulates again within first percent fair value gap above this sell side liquidity pool. And now, boom. S&P also moving lower, Dow also moving lower. Looks like, and I mean, you also have to look at it this way. We've traded up into first percent fair value gap, wicked higher, but price was not even able to wick and trade up into the opening range gap, which is definitely weakness. Price trade all the way down. We have a SIBI, a BISI to the upside and a SIBI to the downside. So this is balanced price range, okay? That's a balanced price range. So price doesn't, if we are bearish, we don't want to see price get up into this portion of price. So this fair value gap should stay open. So now let's see. Let's see how we trade inside of this fair value gap. So one price to close below the midpoint. Okay, and price stays. Vielleicht dreht er jetzt wieder nach oben. Never mind, sieht nicht so aus. Yeah, bro, doesn't look like we turtle soup this low and go high again. But it's difficult to trade to frame a short setup because, as I told you, I don't want this fair value gap to be traded up into because that's a balanced price range. So I guess I would want price to trade below it, below this fair value gap, retrace up into it, and maybe then look for a sell opportunity. But I don't know. Kind of doesn't look too bearish right now. Maybe Timor is correct. I don't know because price only was able to wick down below, left this portion of the fair value gap open, and bodies were only able to close in the upper half. I don't know. Auto block traded up into. Macro, 5 minutes till 11 a.m. No trades taken yet. Bro. Fucking boring. Okay, S&P also rather looks bearish to me. Um, hmm. I guess we have another New York session without taking a trade. There you go. Order block high. Now price shouldn't have any difficulties to get through this wick's midpoint, which is right here. So we can note this one. Price should just dump and close below the midpoint. Midpoint of fair value gap. Come on. Okay, close at consequent encroachment of this wick. We actually want to see stretch our yellow limousines. ICT always says because obviously he has green and black shaded candles. Black stretched limousines. Okay, price failed to trade up into fair value gap high. I like this. What's the 30-second chart saying? Okay, 50-second chart. Okay, close below midpoint fair value gap, midpoint wick. Trade up into wick, so now maybe we should expect some speed to the downside. Um, 10:58. Come on, come on. Upper quadrant. Okay, price stayed within this wick's range for now. Okay, 1 minute left. I don't trade after 11 a.m. I don't take any entries after 11 a.m. So I guess that's it for me. S&P, Dow, and NQ kind of consolidating inside of this fair value gap. Timo W. Nice, bro. Very nice. Good entry. Good. Good trade management. Thumbs up. Exited at the high. As I told you, price would stay low. The first percent fair value gap for now. Oops. There's speed coming now. Come on. Close below. You want to see this or the very next candle close below this fair value gap low level. So this or the very next candle should close below or not should, you would want it to close below if you are short right now. All of this wick should be consumed. Bro, I outlined this perfectly, but how do you want to take a trade? I'm not taking a trade in here because at this point, and there it is. See, I told you boys. At this point, it's 50-50. Do we go up or do we go down? This first percent fair value gap was kind of the threshold. If price stays below it, we look for lower price. If it stays above it, if it trades through it and use it as an inverse fair value gap, then you look for higher prices. Okay, and we stay below. Okay, how do we know? It's likely to stay below this first percent fair value gap as soon as price trades down. BISI, SIBI, balanced price range, order block. As soon as this candle closes and this candle trades below its open, I knew, or you never know 100% guaranteed, but out of from experience and reading candlesticks for the past 1.5 years and having watched every fucking single video of ICT, that's a balanced price range, okay? So the only opportunity would be for me to go short from this order block. That would have been the only opportunity for me, which maybe I should have taken this one. So stop loss here, or maybe like this. Damn. Yeah, okay. There you go. But bro, am I the fucking market maker? Okay. I was reading price perfectly, but still wasn't able to enter on any fucking trade opportunity. Why? 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 So my problem is, okay, I want to see this be a balanced price range. Okay, for me to go long and enter short now, I want to be this order block confirmed as an order block, and here it is confirmed. And then before I take a trade, I want to see this fair value gap become an inverse fair value gap, trade up into it, and then look for a short opportunity, which obviously is too late now. We are 11:05. I don't trade after 11 a.m. So that would have been the only opportunity to go short from this order block. And why didn't I take this trade? Timo, what do you say? I actually outlined it perfectly, didn't I? Said, okay, order block, here, bam. Bro, I don't know what I should do. Maybe less talking and more doing, more executions. I don't know, my problem is I always want the last confirmation, okay? Confirmation for me, for lower prices, would have been this fair value gap, okay? This percent fair value gap kind of acted like a threshold for me that holds price lower or higher, okay? um, I kind of view this fair value gap the same, okay? Um, if we get below this fair value gap, I want to see lower prices. That could have been a trade here, but obviously 11:02 after 11 a.m. So I thought about maybe stretching my trading time window from 10 to 11 to maybe 10 or 9:30 to 11 to 9:30 to 11:10, because the macro is from 10:50 to 11:10. Come on, bro. What's wrong? Bro, what's wrong? What's fucking wrong? Okay. Review. 10:50 at 11:10 macro time window here. Ah, bro. 11:10 is here, okay? Macro time window 10:50 to 11:10, okay? Boom. Macro time window supercharges your trade setup, okay? But of course, you cannot just enter a trade because it's a macro time window. You need some more narrative and some more PD rays that support your buys. So, supporting PD rays, weekly fair value gap. How ICT teaches high probability PD rays, okay? This fucking, I don't know, like this. Yes. Midpoint of weekly volume imbalance. Go back to the 1 minute. Where is the weekly volume imbalance? Midpoint? What do you find there? Fucking auto block. Below balanced price range. Within a macro time window, weekly volume imbalance gradient level. So every PD ray, like an order block or a fair value gap that lays on top of a weekly or daily fair value gap, wick gradient levels, whatever gradient levels, that's a high probability order block. And if it's formed or price trades into it during a macro time window, that's fucking supercharged. That's like super fuel, like racing fuel for your fucking car, okay? So, boom, trade up into it. Break your bait. Okay, maybe we should just go through my model. NQ, ES, Dow, moving same direction, check. Time-based liquidity, buy side or sell side, relatively equal highs or relatively equal lows, taken. Kinda, okay, yes, we have buy side here, which I outlined beforehand. So I told you beforehand, before everything of this price run happened, I told you I would rather see this as a turtle soup if price trades above this buy side, minor buy side here. I would rather see it as a turtle soup. And a turtle's fucking souped, okay? Come on. Okay, this is buy side. Check, check. Time-based liquidity, relatively equal highs, lows, new day opening gap, or 5% fair value gap, or whatever. Draw to the downside. Let's see. Okay, we have a low right here. It's not specifically a time-based liquidity low. It's just a low from 10 to 11. It's sell side, which technically would have been enough, but would be even better if there would be some kind, if there was some kind of, I don't know, new week, new day opening gap, whatever. But that's enough. Okay, sell side. 1 minute auto block, 1 minute auto flow confirmation. Confirmation, breakaway gap, that's confirmation as outlined before. I told you guys what I would want to see, or what I would mean by auto flow confirmation. So just a breakaway gap that's not traded into, okay? Obviously here. So I got fucking everything checked for my entry model criteria, and I didn't enter. Why? I think I wasn't aware at the moment. Maybe I should have just looked at my piece of paper and checked everything imaginary, like in my head. And maybe then I would have realized, okay, that's actually my model. The reason why I didn't enter on this auto block is we wick lower, wick lower, wick lower, but look where the bodies stopped, okay? I would have wanted bodies to stop or trade or close below this midpoint and then retrace maybe into a fair value gap that would have formed here. Okay, maybe let's drop down into a 30-second chart. 30-second, no fair value gap. 15 seconds, that's a 1 minute order block. Okay, so traded up into here, could have entered here, or no fair value gap on 30 seconds. Okay, that's a fair value gap, but I don't know. I mean, look where the body's. Okay, so only opportunity to trust this order block would be to anticipate this fair value gap to turn into inverse fair value gap, which I did. But as I said, this wicking to the lower half of this fair value gap, I wanted to close below and then retrace. That would have given me the confidence to take this trade. I mean, auto block low, stop loss above this balanced price action midpoint. One to four. Ah, come on. Bro, I'm tired from reading price action correctly, predicting everything, or maybe not everything, but most things, okay? Predicting most things, or actually today, kinda everything. I told you, if this, then this, if this, then that, and I told you, okay, trade no more higher than new first percent fair value gap if actually bearish, and we are bearish, and trade no way higher than this first percent fair value gap. Trade it lower. First balanced price action. Told you guys, okay, you want to see this fair value gap to stay open, form an order block, and then retrace into order block, and this fucking actually happened. Okay, I told you beforehand, but I didn't execute, and now I got to figure out why I fucking did not execute. I even wrote this shit down. Money management rules here. Psychology. It's not about being right or wrong. First thing. Is my trading setup ready? Model rules. Check, 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 check. Yes, sir. Do I follow my checklist? Yes. Do not hesitate or overthink. Execute. Okay, so as I set a goal for me. Okay, goal is to make $1,000 a month. Okay, $1,000 a month equals to um equals to 1,000 divided by 4, $250 a week. $250 a week are $50 a day. $50 a day equals to 25 points a day. That would have been 25 points. Maybe if I just don't aim for the fences, 75 handles, of course, that's absolutely in the realm of reasonable to target this low. But if we just stay at 25 points a day, every day 25 points, 5 times a week, 20 times a month equals a fucking $1,000 a month. Because one handle, 1 point in Nasdaq, in micro Nasdaq, is worth $2. And 500 points a month are 125 points a week, which equals to 25 points a day. That would have been 25 points. And maybe if I set my goal to just 25 points, then maybe I would trust this order block to only deliver just 25 points. And from there, it could just deliver 25 points and still move higher, but I would have been profitable. Would have been better than just sitting there and doing nothing. Habe auch erst jetzt gecheckt, dass der Model war. Sehr unlucky. Manchmal traue ich mich auch nicht reinzugehen, obwohl es mein Setup ein Model ist. Ja. Bro, hesitation and kind of being afraid of entering is my only and my biggest opponent in this endeavor here. Because if I overcome my fear of getting into a trade and stop second guessing everything, not second guessing my ability to read price action, but second guessing the moment of execution, bro, I would have, if I was doing that, if I was just following my model, which obviously occurred here, bro, how do you pronounce this fucking word? Occurred, bro, I don't know. My model existed here, okay? So if I was just following my model and would just be executing, combined with the ability of reading price action to the degree that I'm able to do now, bro, I would be profitably trading, and not like slightly profitable, bro. I would be just banging everything, bro. I would just, oh my days, I was just printing money. But this fucking hesitation, this second guessing, this overthinking when it comes to the point of like execution, bro, you cannot second guess here, bro. You had just one opportunity, you had 1 second. Okay, not maybe 1 second, maybe go down to the 15 second. Oh, bro, not 50 minute. 50 second chart, sorry. So you had 1 minute, 1 minute auto block here, okay? Let's even go down to the 5 second. Can we go down to the 1 second chart? I guess. Yes, we can. Oh boy. Okay, never been on the 1 second chart. Okay. 1 minute auto block. Here was the open, and that's a wick on the 1 minute, which is obviously on the 1 second chart, a candle. That's a low. So I had 1, 2, 3, 4 seconds. I had 4 seconds to execute. 4 seconds of second guessing, 4 seconds of doubting, or maybe 3 seconds of doubting and 1 second to execute, okay? I had 4 seconds in total to take my entry opportunity, which is a small window of time, bro. Sometimes you just have 4 seconds, 1 second, one tick, boom, like this. One quick, in a second, in a microsecond, you have this wick and it trades all the way up again, okay? Sometimes you only have a wick to enter on, which this 3 seconds on a 1 minute is obviously a wick, okay? So 4 seconds to enter on this trade. I already outlined I already outlined or predicted this candle to be an order block. When Timur said, maybe price turns now and reverse to the upside. Before this happened, he wrote that at, can I see the time? No. Okay. He wrote, vielleicht dreht jetzt wieder nach oben, aber kein Entry für mich. So basically he said, here I think at this point in time, he said, okay, maybe price now reversing higher again. And then I said, no, that's probably an order block and I want to see lower prices. Bam! I was right, predicted that as an order block, but wasn't maybe aware that all of this criteria, all of this supporting ideas I want to see are now existing in price action. Okay, Timur says he missed an entry opportunity, placed a limit order, but price went down to its limit order, but like failed 1 tick above it and trading higher now without him. So yeah, but I don't know if we have a sustained bullish price run now. Maybe. Okay, this is the weekly volume imbalance midpoint. So if we say put all the gradient levels on it, you can see price originated, this whole price originated from the weekly volume imbalance low. So all significant price runs, bro. What I'm sharing here, bro, is just so fucking good. It's the knowledge of every fucking ICT video that is out there, consumed in my head, projected onto the charts, and I'm saying what I'm thinking, and it's happening, guys, okay? So this is fucking sauce. It's fucking delivering, as you can see, predicted beforehand by me. So I still think that's just a retracement higher. Of course, it originated from the weekly volume imbalance low, which is reasonable to say to, okay, it doesn't matter if it's a retracement or a reversal, there's an opportunity to make money, okay? To take a long all the way up to the buy side, or maybe just a quick scalp. For my opinion, if you go long here, that's just a retracement. I could be wrong. It's just what I would see right now. But I don't care no more. Okay, it's 11:30 now. We are not trading in New York. We are now approaching 11:30, which is the lunch macro. So I'm not just too comfortable with trading lunch macro. Okay, so don't know. I don't have much trading experience in trading the lunch macro. So I would say the precision and the prediction, the degree of predicting price during lunch macro isn't too good, maybe, because as I said, I don't have much experience in trading lunch macro. So the point is, the point I was trying to make. Yeah, I actually lost my point. Oh no, okay, reversed here. Doesn't matter if we resume higher or just retracing higher and then moving lower. It originated from weekly volume balance low, so you can anticipate a run higher, okay? So even if, I don't know, Timo probably wanted to go long from, again, this inverse value gap as he did from here. Go long here. Oh boy, okay, maybe this one. I think he placed the limit order here, but price didn't came all the way back down into this inverse value gap. Damn it, bro. Okay, here, stop us here. Maybe what were you targeting? Maybe again first percent fair value gap. Maybe again auto block. Damn it, this auto block's fucking high probability, boys. High probability. All my days. All my days. Bro. Okay, now you answered long. Good luck, boy. Good luck. 11:30 now. So, okay, we just want to help Timor. Okay, so 11:30 macro. The thing is, 11:30 macro. You could be right, Timor, because with the long setup. Because what I've learned from ICT, and I only learned from ICT everything in regards to trading. Okay, when New York session is one-sided, one-directional, moving obviously in one direction without having too much of a retracements doing New York. So this is actually the only retracement we had, and it's kind. I don't know if we can say it's one directional because we had a lot of consolidation, a little retracement, then the real move I was anticipating. Lunch macro now, so New York was rather only to the downside, so maybe you could now anticipate a run higher in a lunch macro. Why could you expect this one? Why could you expect that? Because the lunch macro is there to stop out everybody who is profitable from New York. Who was profitable during New York? Shorts were profitable. As you can see, the majority of price movement was to the downside. So everybody was going short, was more or less the majority of them was profitable. Okay, so I guess lunch macro is aiming for these relatively equal highs, at least. That would be low hanging fruit. So Timo says, okay, yeah, it says, yeah, probably, yeah, okay, he kind of, I don't know, I don't want to blame you, or I don't know, Timo, I want I wish only good things for you, okay? So, but I guess the reason, so he entered here. I think it's kind of a formal entry because he wasn't filled here because price didn't trade down into his limit order. So he entered here. But now price stop loss is here. And he says, bro, trading with that kind of a big stop loss is bullshit. And it is bullshit because he has like a stop loss of more than 50 handles, so that's absolutely not my model. So, but he's making money. He took this move, bro. He's profitable. He made more than me. Not that I'm not saying that you should compare you to everybody else or anybody else. So just don't compare you to anybody. But just saying, bro, he made money. I just predicted everything, but wasn't profitable, and I didn't lose money. So zero, fucking zero. I would have rather taken this trade and make money, even though maybe that's just 0.5 or maybe 1-to-1. Yeah, profitable in demo. Bro, profitable in demo, fuck it. If you're consistently profitable in demo, guess what it means? Turn on live account, hold risk very low, don't over leverage, just one micro, and then you also don't have too much of too many emotions attached to your trade. So everybody's saying, oh, if you trade on live account, that's a whole different thing because you know what? You're trading real money. Yes, you're right, you're trading real money, but I think it depends on, are you risking $10 or are you risking 100 or 200? If you're comfortable risking $10, bro, it doesn't matter if you are, in my opinion, if you are in a demo account or if you're a live account. Bro, losing $10, I think nobody gives a shit about losing or making $10. At least not in Germany or I don't know, United States or whatever. Of course, I don't know, in Africa, 10 bucks, or maybe in Chile, South America, of course, maybe that's more money there, but yeah. Bro, I'm also nervous, or not nervous. Okay, maybe yes, I am nervous if I'm trading demo, because I know that's a fucking real market. It doesn't matter if it's demo or it's live account. It's about, I know everything I do here would be something I would do on live account. So I treat this demo account like I would treat my live account. Every rule I have is every rule I have is I don't know, made up, or how do you say? I don't even know what I want to say in German. So if I was starting now a live account, I would just apply everything I do now on my live account. So I wouldn't change anything. And that's the reason why I'm treating this demo account like my live account. Because if I start a live account, I would just put 10,000 bucks into a live account, only risking max 25 handles per trade, which equals a maximum risk of $50. I would say $50 is a reasonable amount. It's an amount of money where I'm comfortable to lose it. Not saying I don't care if I lose 50 bucks. Just saying if I'm losing 15 bucks, it doesn't make me richer. It doesn't make me poorer, poorer more. It doesn't make me poor, you know. So making or losing 50 bucks wouldn't do anything to, I don't know, my entire existence. Okay, so and I wouldn't be scared if I had lose 100 or 150 bucks. Okay, of course, 150 bucks would hurt me. I would think, okay, bro, unnecessary to lose 150 bucks, but I know I have the ability to make it all back. So I wouldn't see it as I lost it. I would see it as, okay, I'm in drawdown, but I can make it back. You know? So you have to kind of, yeah, understand my thinking process. I don't know. So a live account, I would just treat it like this account, only risking max 25 points a trade, which equals to a maximum loss of $50. This trade would have been, yeah, about 20 pip, 20 handle, not pip, sorry, 20 points, or like, yeah, 17, 18 point stop loss. And a potential take profit of 75 points. So more than 3 or 4 times my risk. And I'm not talking out of my ass, guys. If you are new to the stream, I predicted everything beforehand. Okay, so my SL is at break even. Okay, where did you answer, Timo? I think you answered. Yeah, maybe. I think at this fair value gap, maybe. So now he said stop loss at break even, which I think is reasonable. Fair value gap, reclaim fair value gap. Okay, this is a bit coloring outside lines, but price more or less stayed at the midpoint of this fair value gap. Okay, so also used yesterday's discount wick upper quadrant supported here price, so that's a confluence that supports Timo's ideas. Okay, maybe it's kind of consolidating. I know, right? I don't know if Timo got stopped out. 5-minute fair value gap. Okay, probably here. Maybe somewhere in here. Okay. Apparently he's still in the trade. Yeah, kind of looks like break even. I don't know. Kind of. Yeah, bro, price kind of consolidating right now. Still respecting the order block here. So that's still a break. That's still a breakaway gap. So right now I would be neutral. I couldn't tell you, okay, I'm bullish or I'm bearish right now. Of course, we have relatively equal highs here. Price is still below 1% fair value gap. I wouldn't be looking for longs below 1% fair value gap. That's what I told you during New York session. Now, since we are in lunch macro, that kind of changes. Yeah, I don't know. We are trading inside of. Okay, let me show you, Timur. We are using yesterday's opening range gap levels, and prices pretty much respecting that. So where is it? Is it this one? Nope. Is it this one? Nope. Is it this one? Yes, sir. Okay. So price is respecting yesterday's upper quadrant and high of yesterday's opening range gap. So if we trade above, and then we could maybe expect this to support price. Price is still ranging between this order block and this fair value gap. So for him, it's a risk-free trade. maybe you just trade your stop loss too early. I don't know. Yeah, but yeah, stop loss is too big. I would have done the same. But actually, look. Probably Timo's stop loss, I think, was below this low. Okay, and he entered here and he said from the beginning, oh, he doesn't like to trade with this kind of a big stop loss, and that's the first mistake, because kind of FOMOing in because he wanted to get in here and not here, so stop loss is way bigger than he wanted to. He says, of course, yeah, he already has a win and a break even now, so but he's still profitable. So good job, Timor. Um, just trying to teach other folks. I guess you know what I'm saying. You already know. So yeah, now we can just delete this one. Can I name? Oh, okay, that's nice. I actually can name all these annotations. So there would be way more, how do you say? You would have I would have had a better overview over my annotations if I named them. On the right side in TradingView, you can review your templates, or not your templates, like everything you draw onto the chart. You can hide it and unhide it, and you can see it on the right side when you click on those two rectangles. So that was moving lower. S&P is also making a lower low, while NQ is still the same range. And now also taking out this low. Still have relatively equal highs, and if we are retracing and taking these relatively equal highs, then I would like to see it during the lunch macro. I would say that's the most, has the most, or the highest likelihood, highest probability that we take out New York IM session buy side, because lunch macro is just made for stopping everybody out who was profitable doing New York, and shorts were profitable, so I guess lunch macro would stop them out. If we do so, we may see lower prices during PM session. So if lunch macro goes for the buy side, and maybe then go sideways or a little bit lower, I would guess PM session is moving lower and maybe targeting the 1 hour relatively equal lows. Okay, Timo's out. Guys, I'm also ending the stream now. Streaming 40 minutes longer than I wanted to. Timor, goodbye. I'm also streaming tomorrow, so if you want to, then I just welcome you. Come and watch the stream, and everybody else. So I would say that's it for today, guys. Nice stream. Outlined price, predicted it, didn't trade, unfortunately. Not unfortunately, but yeah, we viewed it. I journal it. I put it in my journal now. So we see you guys tomorrow at 9:15 a.m. Be safe, guys. Good luck, good training, and see you tomorrow.